Hello and welcome to the Chart of the Week video with me, David Madden. Today's date is Wednesday the 30th of January 2019 and the time has just gone 12:02 GMT. This week's Chart of the Week is gold. The gold market has been pushing higher for many months now. It began its bounce back in August, but really since about mid-November last year, the gold market has been making a very large move to the upside, and in fact today the gold market hit a fresh 8-month high. If we take a look at the MACD indicator, the MACD histogram down here, we can see that in the last few sessions, as the gold has been printing fresh multi-month highs, we can see that there's been a clear swing from negative momentum to positive momentum, and there's actually an increase in positive momentum. So the steady increase in positive momentum confirms the upward move we're seeing in the underlying gold market. So essentially, the market's moving higher, and the momentum is clearly with the bulls. So if the market does manage to push on higher from here, keep an eye out for the mid-May high of 1326. 1326, this area here, and then if you go beyond that, keep an eye out for 1335. These are levels we could see gold targeting in the near term should the positive move continue. And even if gold does manage to have a bit of a pullback, we could see fresh buyers enter the fold, because over the last number of months, as we can see here, buying on the dip has been a very popular strategy. So if the gold market does manage to pull back a bit, we could find some support coming into play in around this area here, in around the psychologically important 1300 level. And even if you drop below 1300, as long as we hold above this region here, 1276, it's more likely we could see the gold market continue its wider upward trend. If you do see a break below 1276, this area here, we could see the gold market drift back towards this region here at 1265, and drop below that could suggest we're heading back down towards the 1250 area. This price area here, which isn't too far away from the 200 moving average, which comes into play at 1246. If you are going to be trading gold, please keep an eye out for the Federal Reserve meeting today at 1900 GMT and 1930 GMT. We'll have the press conference from the Federal Reserve. No change is expected to the interest rate, but traders will be listening out for the press conference and assessing the language of the Federal Reserve. And in recent weeks, the Fed have kind of moved away from previously hawkish commentary to a more kind of neutral to kind of slightly kind of dovish commentary, and kind of sit and hold type commentary from the US Central Bank. There's a fairly strong inverse relationship between the US dollar, which is fueled by the perception of US interest rates, and the gold market. And in recent weeks and months, as gold has risen, we've seen the US dollar drift lower. So if the Federal Reserve continue to give their less than hawkish, a bit more kind of neutral position, and give an indication we're not going to see any interest rate hikes in the kind of short to medium term, that's likely to kind of keep pressure on the US dollar, which in turn is likely to kind of help gold move higher. Just before I go, if you have any comments to make on this video or any of the other videos we make here at CMC Markets, please feel free to leave a review on Google reviews. Thank you very much.